How's it going, everyone? Brian Hoops here with Midwest Market Solutions. This is our Market Insider TV closing commentaries. On Wednesday, November the 29th, we're looking at a chart here of cattle. This is live cattle, and just going to extend this trend line a little bit. You can see we broke below it for 2 days, but then right back above it, actually closed below it one day, then right back above it the next day. So the question, if you're a technician, is did we break the downtrend, and are we having a retracement here and then we'll fall back again after concluding that retracement, or is this just a pullback in otherwise a kind of a bullish market, because we've been in this bull market since late August. Now, retracement levels are here. I think you go to at least this 50% retracement. We talked about this the other night, 128.22. That is where I'm looking for February to go towards. We could possibly go to this 129.55. There's some resistance here as well as the 62% retracement. I'm going to take these off of here. But here's some resistance right in this area. I'm going to draw it on this chart. 129.80, that's also the 62%. So anywhere, I think, in here and here is a place where we're going to top this cattle market out. I don't think we go back and take out these highs. We've had two bearish technical reversals that are probably a signal that the trend has changed, but unfortunately you don't know that for sure until you take these lows out again. If you take these lows out, likely the trend change has been completed. But right now you've got, if you look at this short-term pattern right here, and I'm going to blow this up a little bit more. You look at this, you've made higher highs, you've made higher lows. So you've got a short-term uptrend going here in this cattle market. So if you're a hedger, I think the best way to play this is to buy puts up in here. We get in this retracement, protect the downside with some put options. You look at this February, your risk is from this 127, 128, 129 area. What if you go back down in here, drop $10? That is certainly a possibility that could happen in cattle if this trend gets broken. And if you wait till here, 122 gets broken, probably too much. You're giving up too much risk on the downside. So buy some puts. You can offset that by buying 128 puts, selling a 118 put. Probably very little risk below 118. That cheapens your cost up, doesn't have any margin calls that way. That's something to consider. Hog market had a pretty good little run up here, had some profit taking, a little setback today. But what we were talking about in the grains here, possible double bottom in corn and the market to bounce out of here. You remember our last couple conversations in corn, we've been talking about open interest increasing, and at the same time commercial buying increase. I'm going to go to a weekly chart here with the commercial entities on it and the funds. Look at this. Here's the corn commitment traders. Look at this. This is pretty bullish when you've got all this commercial buying in here. A lot of buying going on around this 350 area. And look at this black line here, or this is a blue line actually. Big increase in open interest. Same time the commercials are buying. That's usually very bullish to the market. So let's keep an eye on that. I think that bodes well for a rally in corn. Now, how high can we get? Well, unlikely to get back up in this 380 area in March, but from 350 back into some resistance here, maybe 368. That's a 20-cent rally. I think that will attract a lot of selling there. Beans were unchanged today. I want to flip to wheat today. Same thing here in Chicago wheat. Notice a lot of commercial buying, pretty bullish in there. Big increase in open interest as the commercials were buying. So usually that is a bullish sign, and something you don't want to ignore. So let's see if we can get a little rally back here in this wheat. There'll probably be a lot of product moving if we do. And I think you probably have a lot of the news here today. Hog weights up 1.3 pounds from a week ago, and well over 5 pounds more than a year ago. That's a little negative for the hog market. No trade on the Fed Cattle Exchange today, and some private export sale announcements of corn and soybeans. If you have any questions, check out your favorite broker. He'd be glad to visit with you. Make sure you sign up on our newsletter service as well. Have a great night. Brian Hoops from Midwest Markets.